Good morning, Alta Realty Group agents. This is Kevin Lauren. I'm the Director of Training and Marketing here. And today we are going to go over a lot of what we went over last week, but it's so important that I thought it was a really good idea to bring everybody back on and to talk about how we can re-engage our clients in our sphere of influence. I'm also joined by Bill Seitz. Good morning, Bill.
Good morning, Kevin.
How are we doing today?
I'm doing all right. How about yourself, bud?
Very good. And let's see, Travis has not joined us yet. I'm sure he will join us soon. But Bill, before we get into what I'm going to talk about, I know that we want to talk about some FHA loan limits as well as the conventional loan limits. And before we even do that, we always want to take a look at the Treasury. So take it away, Bill.
Yep. Well, it looks like we've had a little dip over the last week, which is nice. We've lost a little bit 2 basis points this morning on the 10-year Treasury, which I think went down about 3 basis points yesterday. So get a little bit of a dip here, which is good.
Yeah.
And like I said, I think I mentioned in our first webinar kickoff last week that I just think it's going to be a lot of the same stuff this year. I don't think we're going to see anything too wild. We're in an election year. And typically the market will stay strong and the economy will stay strong, at least and through the election. So don't be surprised if your 401k looks healthy again at the end of the year.
Right.
But my brother-in-law does work over at Union Bank, and he does a lot of market analytics. And he says after the election, that's a different story potentially. So.
Sell.
Yeah. So we'll
Short
keep everyone, we'll keep everyone apprised as any information comes along. But this is poised to be a big year for the economy and for real estate. So let's all take advantage of it.
Yeah, for sure. It looks like we've got some good news on the trade deal with China. I know that's kind of spiked the market this morning as well.
Yep, it hasn't affected the Treasury, which is good, and typically it would, but it might have been priced in.
Yep.
Sometimes the market you think is going to have a reaction, but those people are very smart, and
This is true.
They, when you hear that word baked in or priced in, they've already anticipated something to happen before it even happens. So the market's already there before it even happens, if that makes sense.
Yeah, for sure.
So anyways, rates look good. And let's just spend a few minutes on the loan limit changes for 2020.
Okay, you want to start with FHA or conventional?
Let's go back to the conventional.
You got it.
Okay, so this is obviously just pulled off of Fannie Mae's website. And at the end of every year, what the FHFA, not FHA, the Federal Housing Finance Agency, what they do is they analyze basically the appreciation in the housing market across all states and all counties. And if they're going to announce any changes in the loan limit increases, or they feel that it's a change is warranted and the loan limits need to go up based on what has happened in the housing market, then they will make those changes. And last year, the baseline conforming loan limit was 484,350, and now you can see on right there on the 1 unit mark, we've gone up 510, 400.
Yeah.
So we've increased the baseline conforming loan limit by about $25,000. So when you're out there with your clients and you looking at properties and you're like, can they afford something for a loan amount of 500? Well, before they might be could be in a jumbo loan, right? Once you go over this mark, you're potentially in a jumbo loan. Depending now this is where it gets a little tricky, if you're in a high cost of living area. So meaning San Francisco, I know we have a number of agents in the Bay Area, right? LA, Orange County, San Diego. And what they do is they create another little separate tier, okay, which you can see it actually doesn't say there, but they create another little tier to say this is a high cost of living area, and they create a separate little niche called high balance. So if you're in, let's say, Riverside County, they don't have a high balance area because the average median home price does not exceed a certain threshold. They don't give that to you. So you're just going to go straight from a conforming loan straight to a jumbo loan if you go exceed this number. So it is a little tricky. It's a little it's a little bit, you got to spend a little time with it and get comfortable around it, but it is important. And I remember when I was selling real estate, 15 years ago, I kind of would just, you know, let the customer, he knew his financing, and I kind of, maybe talk to the lender real quick, and, just kind of like fingers crossed, hoping that, you
Yeah.
know, everything works out. But the reality is the more more knowledgeable you are with this stuff, and the more comfortable you are with it, the more educated you can be to your client, and the more likely that you're going to ask the right questions when you do talk to that lender, and so on and so on. So, I don't, come up here and, in these webinars and try to bore you with stuff that I think is irrelevant. Really just want to spend a few minutes every week, or, most weeks, in giving you information that is relevant. And I
Yeah, we
think
want to make sure that you guys are, providing value to your clients. This is part of it.
exactly. So, and just so, how do they determine a high cost or a high balance area? So basically, what it comes down to is if this is their guideline, if 115% of the local median home value exceeds the baseline conforming limit, which in this case would be 510 400, then the maximum loan limit will be set higher than the baseline loan limit. So basically what they're saying, if that middle point of the housing market exceeds 115% of that number, they're going to create this new little area, because it's going to be considered a high cost of living region, if that makes sense.
Yes.
So that's kind of how they determine that. And it's nice to see that they did raise the loan limits up this year, because as we all know, most areas did see appreciation, and some markets do have scarcity, and you're still finding it hard to find inventory depending on the pocket you're working in. And we all know how frustrating that can be, is if you don't have the right amount of inventory, getting offers accepted and getting things into escrow is challenging. And what it does is it drives the price up, right? Just basic supply and demand.
Yeah.
So let's go into the FHA world real quick, Kev.
You got it.
Okay, and then you scroll down.
There we go.
And you can click on California over there. Boom.
Fee rates?
No.
Just California.
Yeah.
Got it.
And you can scroll down. Okay, perfect. So FHA is separate from a conventional loan, right? An FHA loan is a insured loan by the federal government. And so what they have tried to do is allow people to get into the housing market with low down payments, right? It's a program to help individuals that are maybe starting out, first home buyers. They can get 3.5% down. Usually the guidelines are less stringent. The rates are actually, believe it or not, are lower than conforming loan limits, but you have the mortgage insurance, right?
Yeah.
And whenever you don't have the 20%, you're going to have to pay mortgage insurance. And so there's also the upfront mortgage insurance premium, which, is they make sure that that they have insurance on this property in case, the buyers do default. But what I have found, which is interesting, is that when I price these loans out, a lot of times the FHA deal is like half a point better in rate than a conventional loan. But the conventional loan doesn't have the mortgage insurance.
Yeah.
FHA does, and it actually almost kind of gets you back to where they usually end up being about where they, about an equal area.
Yeah.
So it's just kind of funny how that works. Everyone says, oh, conventional loans way better. Well, it can be, but it also, if you look at payment, most likely it's kind of in that same zone. So, but one thing I want to point out before we go here, let's just click on, let's just go to whatever, it doesn't matter what county.
Alameda.
Alameda, okay. Now, the first thing you'll notice is that 765,600. Well, just like a conventional loan, Alameda County is a high cost of living area.
Sure.
Right? And we all sell residential real estate, right? Residential real estate is 1 to how many units? 4
Four.
units, right? So we could be selling duplexes, triplexes, fourplexes, and still fall under the umbrella of residential mortgage, right? Residential real estate transaction. Well, if you notice here, and I think a lot of people forget about this, and I'm guilty as well. If you look at these numbers here, you have 765, 600 for a single family. That means if you're qualified and you have a good buyer, maybe they don't have a lot of down payment, they've got 3.5%, they've got good credit, they make plenty of money, they can show they can repay the loan. Well, they can get a loan, an FHA loan, up to 765, 600. It's a pretty healthy loan limit.
Yeah.
Well, look at the duplex. You could be buying a duplex for just under $1 million in loan amount and offset some of that cost of that property by renting out the other unit.
Oh, yeah.
Triplex, quadplex. So I bring this up because a lot of people forget that you can buy these duplexes, triplexes with 3.5% down, assuming that the borrower wants to live in one of the units, and rent the other two out. And the rents, the proposed rents and the market rents will offset a huge portion of the mortgage and the liability that comes with buying the property. So maybe you're in an area where inventory is tight. Maybe your borrower can't really, get into something, on a single unit level, but maybe it makes sense to start looking at, maybe they would be open to buying a duplex. Maybe they'd be open to buying a triplex. Maybe there's something that fits in these numbers that you haven't thought about. And maybe they're young, maybe they don't have a family yet, maybe no kids. And they're like, hey, I can do this for 2 or 3 years. I can live, work, and have an income property. And I think a lot of people forget about that opportunity that exists.
Yeah.
Because 9 out of 10 or more, more than 9 out of 10 times, we're all doing single unit properties. So it's just something to think about because this opportunity exists. There's not much difference in getting qualified. It's the property has to be in good condition. This and that. The market rents have to make sense. They have to be reasonable, and they can use those monies to qualify for these properties, which are much higher price points than if they were to buy one by themselves.
For sure. Now, Kiki Baker's got a good question. She asks, in the event of a purchase of a 2 or 3 or 4plex, does the potential rental income get considered towards the loan amount the borrower will qualify for?
Absolutely.
Absolutely. Right? Great question, Kiki.
Typically 75% of the market, they do basically a market survey at the time of the appraisal. So, for example, let's just say, you had a triplex and they're saying that you can rent both units out for $4,000. Well, then if you take 75% of $4,000, $3,000 would go towards the qualifying debt ratio with the person's income. So that you're making up a lot of ground being a landlord or being an investor of your own in this property, right? You can pull $3,000 of spread of property taxes, insurance, and all the things that you need to pay for the property, plus what you're contributing with your own income. Now it starts to make sense potentially. So that's a great question, Kiki. So 75% is typically what the investor wants to will give you for that.
Got it. No, that's great. And, everybody should really be looking for that opportunity. That's what I looked for when I was looking for my home. I needed to have, a separate studio or something else that I could rent, to somebody else to offset my mortgage. So, everybody really should be looking at that.
Well, Kevin, if you remember when we were probably in college and just out of college, these duplexes down here on the Newport Beach Peninsula were only about $400,000 to $500,000, and back then, granted, it was the value of the dollar. It was we weren't making as much money, but it was not blown out like it is now. And if we had just been able to snag one of those, in our early 30s, we'd be sitting really pretty. But that's what happens.
We weren't very smart with our dough back then because we were young.
There you go. That's right. So
all right, live and learn.
Anyways, that's just my my presentation for today, Kevin. I hope everyone kind of just at least gets kind of the head turning a little bit on this stuff. And like I said, I know for some of you guys this is probably boring and it's not something you want to listen to, but it is important just to get a few minutes of it every day. And some of you probably really, it does, the light bulb goes on and says, hey, maybe we can use this stuff.
For sure. And so, guys, when I put out the replay, I'm going to make sure that I put the links to these two websites, because they should be, website links that you put in your favorites, and you reference them. So, really good stuff, Bill. Appreciate that.
Of course.
So today we want to go, I know we went over this last week, but this is so important. And I actually have had a lot of agents contacting me since last week, asking me the same kind of questions. And so I think it's really important that we kind of go over this again. So again, beginning of the year, what a better time to get back in touch with all of our prospects, clients, people in our sphere of influence, really anybody that we know. And one thing to do is to send everybody you know a 2020 Outlook real estate market forecast. And so I've got this for you guys. And I know several of you have taken advantage of it and put it into your blog posts, put it into your website, sent it out to your clients, made it part of your monthly newsletter. And that's amazing, guys. What a great thing to do. So again, I just want to go through the mechanics of what you guys all should do with this market forecast. So first of all, I have it available in a PDF or in a Word document. And so I can get that all out to all of you. Not a problem. Just send me an email. I'll send it to you. It should be in the agent marketing, in the agent resource center. I know Courtney has been working diligently on getting a lot of new stuff into the agent resource center. So hopefully that will be completed this week. But this is the mechanics of what we want to do with this piece. Is we want to go ahead and we want to publish the piece into your agent marketing website. So how do we do that? We literally highlight this entire piece, copy it, and we go into our agent marketing website, and we go into our blogging, and we add a new blog, and we paste the blog in here. And I think they just like us to use Control-V, which is fine. So now we have this amazing blog post in our blog area. We can select an image. I've got this same image that I've showed you guys. I've got that image for you guys to use. This one right here. It's branded with the Alta Realty Group logo and so forth. So you're going to upload that here, select an image. I'm not going to do it right this second. You're going to select an image. You're going to upload it here. And we're going to put the same title.
Kevin.
Yes.
When you select an image, is that just is that like a stock thing that agent marketing has in there, or is those images that come up on somebody's computer?
It will. What will happen is once we post it, it'll come up in the blog post itself, and it is an image that we go ahead and in your file locker. What we would do specifically is we would upload this file, and I'll actually get it. Might as well.
Sorry about that, but
no problem. No, this is really important because I know, I'm so used to just flying through this stuff and it's easy to me, but I know that it doesn't come, second nature to everybody else. So yeah, we literally go in, we find our image. And actually, I think my image is over here. We find our image in our files, right? Here it is. And then that goes into our file locker. And then we copy this file link. And then when we go back into our blog, we paste our link. And then this is like a market analysis kind of a blog. Another thing that I like to do is to get like the first, basically an excerpt, because this will be pop up in certain places. So you get a little excerpt right here. ... And we save it and we publish it. So that it's as easy as that, guys. And so now this blog is on our website and looks great, right?
That took you all of 3 minutes.
Exactly. I mean, it's really easy to do, guys. And so then this is the most important part. Okay. So we copy this link because this is now the link to this information, and we're sending people back to our website, which is so key. Can't stress that enough. So let's get back to our action plan. So we publish that to our blog. We make sure that we have everybody into our database in our in our CRM. Then we customize a cover letter. Now this cover letter, I've got a great template for you. So you're going to send this cover letter, you're going to send this email to everybody in your database. Hey, Happy New Year. I'm trying to get, this is just basically, it spells out, hey, I'm here. I've got a great, outlook forecast for you to read. You put the link here, right? So that way the person has to go to your website in order to read your market report. Can't stress how important that is. We want people always coming back to our website. We want everybody to know that our website is a resource for them. If they're looking for questions, all kinds of stuff, we really want to build our websites out to be complete resources for these people. Really, really important. So, and hold on, I've got a question from Alejandro. Alejandro, I will help you find your website. Best thing to do, Alejandro, is just schedule a one-on-one appointment with me, and you and I can go through the entire thing. Super, super good stuff. So don't hesitate to do that. And the easiest thing to do is to go to my Calendly link, calendly.com/Alta Realty Group. That's also the link to my Calendly calendar is also always in my signature line. If you've received any emails from me, you can just click on it and schedule an appointment there. So this is what we're going to be sending to our clients. And of course, we're also going to be, putting in a link to our regular website and asking that. And this is just, I want you guys to customize this a little bit. This is a great start. It's a great template, but I also want you to, put in things like, hey, remember, I also like referrals. I love to work off of referrals. I would, and to basically always be asking for referrals in your email communications with your sphere of influence. Super, super important. So, and we do have, I apologize, Travis, we do have you on here, I think. Nope, Travis is gone again. So the getting back to our action plan, once we have our email template ready to go, we're also going to want to share that blog post on social media, right? So for sure, we're going to go and take that same link, we're going to copy it, we're going to pull up our social media, and we're going to paste this into our social media. And of course, mechanically, all we do is we get to our social media page, we go into the write a post area, and we paste our link. And sometimes the links don't fetch up a good image. So what do? We add the image. So now we've got this amazing blog, or social media post. And remember, guys, once we have put our link into this area, and we know that our post will link to our website, we no longer need this right here. So now we can put whatever text that we want to get people to click on this. So this is what we're going to have to do. We go to something like, click here to see the market forecast for 2020, right? And maybe some other enticing text that will get people to want to click on it.
So, Kevin, would you maybe want to use like your your specific area for?
Oh yeah.
Newport Beach or for San Francisco or, what are home values going to do this year in San Francisco?
Absolutely. Yeah. Oh, for sure. Now, keep in mind that this specific report is really a national report, so it's not really going to get into the specifics. But as far as, and you could even add something like that, add a paragraph about your specific market into this market forecast do a little research yourself, right? Add a couple stats, local stats. So really good idea, Bill. Put in, click here to see the Newport Beach, right? Market forecast for 2020. A little more enticing, because then what we're going to do, of course, we're going to post this, and this is going to go out to all of the people that, in our case, the 900, the 760 people that follow us. But we can also use this to do a boosted post, which is the next step in our action plan. So once we've posted this, we can definitely run a boosted post for this particular blog post. And so not just the people that like our page are going to see it, we're going to get that out to all the other people, right? So really, really key stuff to be doing. Okay, and then, use this little phone script I have down here in order to follow up on every single person that you sent it to. This is Kevin from Alta Realty Group. Just wanted to make sure, wish you a happy new year and see how you're doing in 2020 so far, right? A little bit of chat. Then you want to mention, I also wanted to check and see if you had a chance to read my 2020 market report, right? So what are you doing here, guys? You're engaging them. You're not calling to, hey, can I sell your home? You're calling to make sure that you have provided value to this client of yours or this prospect of yours. You're not being pushy. You're just letting them know that you have sent this and you want to catch up with them real quick. You don't have to keep these people on the phone for more than 2 to 4 minutes, unless you're chatting and you're having a good time, just, shooting the breeze. So what a great way, guys, to get back in touch with your sphere of influence. I mean, this is it. So yeah, Alejandro, hey, I can sell your home. Yeah, exactly, Alejandro. So it's always like a tap on the shoulder. Hey, I'm still over here, still doing, I'm still doing real estate. So, really, these are just reasons to contact our sphere and to remind them what we do. And that's the name of the game with real estate. As we know, people don't really care too much about real estate until there's a life event or something happens where they're like, oh, now I want to sell, or now I got to buy a home. And all of a sudden, real estate and realtors become real important out of nowhere. Nobody wants to hear from you until then, really.
And also, Kevin, we've all had this happen to us. Whether you're doing mortgages like I do these days, or you're selling real estate, everyone's had a situation where the person you thought was like, his acquaintance or a friend, but everyone knows maybe more than one realtor, but maybe you thought that you thought that you were going to get maybe their sale when it happened, but you didn't really maybe stay as in touch as you should have, and then you found out that they listed with your someone down the street that you thought you had an advantage over, or you thought you would get the sale over, and you didn't get that sale. Well, I can guarantee you, if you do these things, you're going to eliminate that.
At least a percentage of them, right?
100%.
That's the name of the game, yeah.
And it's frustrating, because then you just start going, wow, you add up the dollars, man. If I got those 2 deals I missed this year, well, they would have been average about 12,000. It's real money. It's real money.
Oh yeah. So, and what I'm going to be doing for you guys is every 2 months at least, in some cases I'll be doing it every month. I'm going to prepare a piece like this. It's not going to be an action. It's not going to be a 2020 market report every time, but it's going to be something to put in your blogs, to contact your people, to put in your monthly newsletters, to have a reason to contact people. And if you're doing this stuff on a regular basis, I can't tell you how important it is and how it really works. And this is what the top agents in the country are doing. Things like this. They're staying in contact with their clientele, right? So that is the deal. Alejandro, what is our brokerage's year-to-date sales for 2020? Well, none for 2020, but 2019 we did very well as a brokerage. We almost hit 100 million in sales, residential.
Well, actually, Tim has all that data, actually, Alejandro, and we've had a number of closings, to be honest. I just don't think that it's been shared company wide yet. but I believe we finished off at 100 and something million as a brokerage in 2019. We finished with about 80 million, I believe, in 2018, and over 100 million last year. Things were definitely moving in the right direction, and we're super excited that people are embracing a lot of Kevin's marketing and becoming better realtors.
Yeah, we have a lot of really good success stories from 2019. Rhonda Butler has been doing great. I know she's been embracing our programs, and she had a great year. Justin McBride and Tara McBride are absolutely killing it. You know, a lot of our agents are really doing well. Alejandro, you've been doing really, really well, and Ana Chavez, Larissa. You know, a lot of these agents are doing very, very well, and it's really cool for us to see.
Yeah, our top agent Alejandro, just so you know, was an agent team, Ana Chavez, Larissa Bergerman, and they did around 35 sides for the year. So they were averaging over 3 sales a month, and so they actually finished number one in the company, and they did an amazing job. And I know, if you guys can put your head around 3 transactions a month, that's not an easy feat, and just shows you how organized they were and how well they were working as a team to get that accomplished. So
yeah, good job, guys. Well, excellent. Well, that is all we have for today. I do see a couple of questions in the chat that I'll answer individually. But guys, thank you so much for taking the time coming on the webinar. So important for us to just get our heads going in the right direction, and it's so important for us to create these plans so we're not just ships without a rudder. We actually have a direction, and we know where we'll go. We can count the metrics, and this is really how we're going to be successful in 2020. So Bill, thanks for coming on the webinar as well. Appreciate your insight.
Of course, buddy.
And Rhonda, thank you as well. So guys, get out there and make it a productive week, and looking forward to seeing all of you on the webinar next week. Have a great day.